Hello guys, I go by the name of Omar, aka Ammarullah, as you all know me. So in this video I'm going to show you how I transform this chart, this thing as you're seeing it here, like how I make the analysis from the starting of this and how I take the trade and it turned out to be a profitable one. I'll show you from the starting to the ending, from all these things, all these highs, all these highs right here, the break of market structure, the gaps, the imbalances, how it feels and how I take my profit. Make sure you watch the video to the end and learn from what I'm going to show you. So let's start it. Let me use this chart and I will make it empty and start afresh. Delete on drawing. Alright, let's go guys. If you are seeing this, this is the chart of BTC, chart of Bitcoin, and if you know what Bitcoin is doing lately, you know Bitcoin is making it's making an uptrend, like it's at uptrend and stuff, you understand. So I will show you how I used the market structure and made my analysis and took my trade and everything. So make sure you watch the video from the beginning to the end. So let's go. So let's start from here. The chart was like this, exactly like this. We are going to start it from, let's assume from here to here did not happen, understand, from here to, okay, let's assume all these things did not happen from here to here. So the first thing, as we look at the chart, what we are seeing here is a liquidity sweep. This highs sweep, this is our strong high. So I marked my strong high as I saw it, and I marked this liquidity right here and right here are double top, which we call equal highs. So they are equal highs, a liquidity void where price may likely come and sweep. So I marked them. That's the first thing I marked. Then I have this low. I have this low again. That's from here to here. So what I'm going to sit and be waiting for is either from here, let me say from here to here, is either the market comes down and take this low out, then I will have another low, or go above here and take out the liquidity, then I will have another high, take out the liquidity, then maybe come down to take the high, the low, or anything else. If it's going higher, then it should just keep on going higher, keep on breaking structures to the upside. But from this high to this low, as you can see, the market was making series of down movement, maybe to feel some imbalances or stuff. I'm not here to show anything that happened behind. I'm only here to show from here to here and how I executed my trade, how I saw my opportunity and took it. So as it is happening, then the market broke this structure, which is right here. This high get taken out, which is a change of character, and that's market structure shift, MSS. So the structure shift from making series of down, lower low and lower highs, then it shift, as you can see right here, it broke a structure. So I marked my break of market structure. After I did that, then the market came and made a high. As it made this high, before this thing happened, then the market retraced back and feel this imbalance, the imbalance that is right here, which I did not mark as at the chart I just showed you before starting this one. It feel this imbalance. After it feel the imbalance, it take out this high again, which is another break of market structure. This is another high again. So what I am expecting, I did not check the market because I know this structure got broken and there is another block down here. There is another block down here, but I did not anticipated the other block to be multiplicated before taking my trade, which I'm going to show you why I did not expect it. I did not wait for the other block to get filled before taking my trade, because that may take a lot of time. You know, I don't normally wait for other blocks sometimes, though it's a massive movement if you wait for it, but sometimes you will have to sit and be waiting for a long time before the other block will be multiplicated. So what I did here was there is this imbalance again, this fair value gap, if you can see. From right here, I marked the top of the fair value gap is a BC, and the down of the fair value gap, I used this tool, trend line tool. Then I used my Fibonacci retracement tool to find the consequence encroachment of the fair value gap, which is the 50% of the fair value gap, which is right here, if you can see. So after I found it, then I delete the Fibonacci retracement tool, which I can even eyeball it, like use my eye to find it, but I just want to be sure of what I am drawing. That's why I use the Fibonacci retracement tool, which you can do the same if you wish to. Understand? And I found the consequent encroachment, and I marked it as ready. So as I saw these things, then I expect the market, after making this high, to come down maybe to somewhere around here and make a small reaction, which is an order block of this structure that got broken. But I don't want to chase that, which I know it will be a liquidity void, like where it will be an inducement. And it came to the other block, if you can see, up then down to the other block. After it came to the other block, it went up again, which is one can even follow it and make some profit, but you cannot hold it for long. After it went, it fell to sweep the high, then came down and take out the liquidity below this other block, this inducement, which is an inducement level, that is what I was even expecting to see. After the liquidity below this inducement level was taken, then the market came down to the fair value gap, the consequence encroachment of the fair value gap, which is right here, and that's where my entry was. That's where I placed my entry and targeted this high first. This high as my first TP, this is my second TP, and this is my final TP. And the market went straight and clicked my TP, like my full TP, if you can see. So, and I placed my stop loss below the fair value gap, below the imbalance. And if you notice the first picture I show you, like the first chart before starting doing this, there was a 5 minutes. There was another entry right here, and I will show you why I took the entry and why I even consider it as another entry. After the market came to my consequence encroachment, which is my main entry, it went up, like it came here, it made this high. After it made this high, when it made this high, it started reversing. Do you know the reason of the reversal? No, you don't. I will show you. So as I saw that high, consequence encroachment, then made another high, then I came down to my 5 minute time frame to see why is the market doing what it was doing. Then I noticed something. I noticed there is something right here, if you can see. After the market changed character to the like after it was making high, then it changed character right here. It left another block, which is right here, and there is an imbalance that is need to be filled. So that was what the market came back to. As it came back to, let me draw it and I will delete it. This is the other block that was there. So the market came back to the other block, which is right here. As it came back to the other block, that's the supply zone. The supply zone in this thing. As it came back to it, then it sold down. It started to sold down. So that's why I know it will sell down. You understand? It will react to the supply zone that is right here. So when it is reacting, then I use the 5-minute time frame to look for another opportunity. Let me remove this so that I will add more position to the position I already have, which is right here. This is a low, a strong one, which is where that's where my consequence encroachment is, where my first entry is, and I consider this as a strong low. So the market may hardly come back to it because there is nothing to fill again. All the imbalances were filled, but this one, after it reached the consequence encroachment, it left the price left the place with speed, and it left some imbalances which is need to be filled. This one is filled right here as the market came back and filled this one right here, the one that is right here. It reacted small and create a liquidity zone, just as it did at the first explanation that I started on the 1 hour time frame before getting to my main entry, if you watch it carefully. So it made an inducement zone. After it did that, it kept on behaving as something happened. Then as I came down, I marked this final imbalance, and that's where my next entry will be, where I will add my position. You understand? Where I plan to add position, even if it is a short-term position, additional position to the one I already had. This is the imbalance. This is the fair value gap. I will just eyeball this one. I don't need to use another Fibonacci retracement tool. So this is the consequence encroachment of it. That's the midpoint of the fair value gap, which I marked it. But do you know something? I missed this entry, this second entry. Why? Because I placed my entry at the consequence encroachment of the fair value gap. I placed my entry at the consequence encroachment of the imbalance of the fair value gap, and I targeted the highs. I targeted this high. It was this one. That was where my target was. And what made me miss the entry was I supposed to even place my another entry, like 2 entries, one at the top of the fair value gap, which I know it must come back to it. The price must come back and fill it. I supposed to place one, even if it's a small one, then place the main one here at the consequence encroachment, but I didn't, and I wasn't with my chart. That was why. So it came, it filled the imbalance. If you can see this, it entered the imbalance more, it entered the fair value gap small, which is right here, and it continues to rally up. It continues to rally up, which is right here, and it came straight to the take profit. If you can see, it came straight to the take profit, and the 1 hour chart 2, that's the first entry that I showed you. 2 went straight to take profit, if you can see, which is a sharp entry. It's a good one. It's a good trade. It's a very successful one. If you can see, it's around, look at the points, 5,000 points, which is, if you are using an account of if you are using a lot size of one standard lot size. Make the calculation, you know how much you make. Even if you are using 0.01, you know how much you make is something. If you are even using 0.10, you know what you make in this trade. It's a very good trade. So that was it. That's what that's what I was trying to show you. I even promised my community that I will show a video of this. Hope you are clear on this. If you are not clear, if there is anything you have question about, you can follow me to my Telegram community, which I will drop the link in the description below this video on YouTube. So you can follow me you can go straight to the channel. I dropped my contact right there. You can ask me anything that you don't understand. You understand? So if you are not in my team, you can join so that you'll be updated of anything I'm dropping. So that's it. If you find this video any useful, make sure you hit the subscribe button and click the like button as well. Thank you for watching.